In this video, I'm going to be doing an analysis on AT&T. So if you guys want to learn a little bit more about the company, what I'm doing with my investments right now, or to find out if an AT&T is a good investment decision in my opinion, make sure to stick around and watch the video. Hey guys, welcome back to the channel. Before we get going on the AT&T analysis, I wanted to do a couple different things on the channel updates. So as of the time of recording this video, we are just shy of 1,100 views on the Simon Property Group video, and I'm sure by the time I post this video, we're going to have eclipsed that number. I wanted to say thank you to everybody who watched that, and since then, the subscribers have actually increased a lot too, and it's possible by the time I post this, we'll be at 50 subscribers. In the last video, I made it a point to reach out and get some stock recommendations from you guys on what you guys want to see videos on. And I actually got a lot of video requests from that channel. So, analyses on Luckin Coffee and Boeing are on the way. Now, if you guys want to see an analysis on a stock anybody else suggested, make sure to either comment on their thread, give their comment a like, or comment yourself so I know which stocks people want to see more than others. Because I think moving forward, there are going to be too many subscriber requests than time that I actually have to make videos. So if you guys are able to make sure that I understand that more than one person wants this company, I'll probably be more likely to take a look at that stock in the future. I'm also going to be experimenting with a few different types of editing styles, so if there's something that you guys really like or really hate that I'm changing up, let me know. Now to jump right into the analysis, I'm going to do a quick overview of AT&T. So AT&T had $181 billion of revenue in 2019, which makes them the largest telecommunications company, or the largest communications company in the world. They've achieved this size by offering products like, and I'm going to try to do this all in one breath, wireless, residential, and business phone communication services, television programming with brands like HBO, Adult Swim, a Cartoon Network, and CNN, movie production through Warner Media, and advertising services through Xandr. Now, by the way, I almost died there. It's pretty obvious that AT&T is involved in a ton of different businesses, which makes them pretty well diversified, and many people look at them as a very safe and defensive investment. AT&T, over time, has also invested heavily into their infrastructure, with over $135 billion being invested in the last 5 years. But one of the main selling points of their stock, and in general all telecommunication stocks, is their generous dividend, of which AT&T has accumulated over 36 years of quarterly dividend increases. AT&T's largest business segment, by far, are the services and products for wireless, residential, and business communications, all of which made up $142 billion, or almost 80% of their 2019 revenues. Now, I want to talk about how competitive AT&T is currently, but I also want to talk about the investments that AT&T has made to increase their competitive position moving into the next generation of technology. Now currently, as I mentioned earlier, AT&T is the largest communications company in the world, and this is not sustainable without being competitive, which AT&T definitely is, with the one other premier player in this space, Verizon. Currently, Verizon has a little bit of an edge on AT&T when it comes to coverage on 4G. However, AT&T is right there with them. Verizon covers about 70% of the United States, while AT&T trails slightly at 68%. However, AT&T makes up for this by offering much more 3G coverage than any other providers. This shows that AT&T is willing to invest in underserved areas and can be more profitable in these areas without competition. And I don't think AT&T is content to allow Verizon to outperform them in the next generation of wireless communication technology, or 5G, and have been making major investments to regain the top spot. 5G technology is a major step forward. However, to experience true 5G speeds, you need to be very close to a 5G tower, about 500 feet away, and this just isn't scalable in areas where the density of population isn't high enough to support it. This is one of the reasons that I like AT&T's strategy, because they segment their 5G coverage into different tiers of speeds. For those in the densely populated cities, they'll get the same 5G speeds as all the other providers. However, as you move into more suburban clients, AT&T sets themselves apart from other competition by providing an in-between option, with quicker speeds than 4G technology, but not quite as fast as if you were within 500 feet of a 5G tower. Also, during the same 5-year period that AT&T spent $135 billion in capital investments, Verizon's total capex came out to about $85 billion, which shows that AT&T is taking 5G infrastructure very seriously and are ahead of the game in the current moment when it comes to investment. Also, in the summer of 2018, AT&T made one of the largest acquisitions of all time with their $85 billion buyout of Time Warner, who owned assets like HBO, CNN, Cartoon Network, and Warner Bros. Studios. I think this acquisition was a pretty good decision for them, but it did come with one major flaw, and that was the debt that they had to take out to make it. The brands that they got are all very strong, and with this acquisition, it also positions them very well to compete on a small scale in the streaming service market. I think my other holding, Disney, is much better positioned to take over the streaming game because of the seemingly endless content pool to draw from. However, the quality of some of HBO's assets, particularly series like Game of Thrones, is very high, and I believe they will always have some people willing to pay to watch these. However, the debt placed on this company because of this acquisition was a little reckless in my opinion. Since then, the company has paid down their long-term debt a little bit, but they still hold a decent amount of debt, which is not inherently a bad thing, but it definitely does increase the risk of the investment. Also, as a side note, the size or revenue growth of their advertising segment doesn't really warrant a mention in this video, but I did want to point out how profitable this very small portion of their business is. On $600 million in revenue in 2019, that generated EBITDA of $430 million. Now, for those of you who don't understand the term EBITDA, it's an acronym for earnings before interest, taxes, depreciation, and amortization. Investors, and those who lend money to companies, use this number as a quick and somewhat reliable way to estimate the company's cash flow, or their ability to repay debt. In this situation, for every $100 that AT&T brings in by selling advertising space, they only have to pay back out $28 in cash, which makes this advertising segment, also known as Xander, a very good business segment to keep around and try to grow. Since the stock market started falling in mid-February, AT&T stock has fallen by nearly 30%, from about $38 per share to their current price at about $27 per share. At these current prices, AT&T stock is trading at a PE ratio of under 15, which historically is pretty low valuation, but with so many stocks plummeting right now, it's weird to say, but they're looking a tad expensive still. Now, I think there is definitely justification for this price though, because they were so large, dominant, and diversified going into this situation, and they're going to be just as strong coming out. The stock also boasts a dividend yield of 7.5%, which if you follow dividend stocks is actually a very high yield, and it's one of the main reasons why investors love AT&T and other telecommunications stocks so much. Investors love the stock because they see the dividend payments as a guaranteed gain on their investment regardless of how the stock price moves, because they will continue to get the dividend payments. However, I think with the current situation, all investors need to do a quick gut check of the dividend safety of our investments. AT&T is not that aggressive with their dividend, shown by their dividend payout ratio of under 60%. This means that if their profits fall by 40%, they would still be able to sustainably pay this moving forward. They've also increased or grown their quarterly dividend every single year for the past 35 years. This means that they not only sustained their dividend, but grew it through some of the largest stock collapses ever, including Black Monday in 1987, where the markets fell over 22% in a single day, the dot-com bubble, where the technology-heavy NASDAQ lost 78% of their value, and the Great Recession of 2008, where the entire stock market fell over 54%. With all of this said, I think the combination of their history of prioritizing dividends and their modest payout ratio going into the situation, their dividend, in my opinion, should be seen as pretty safe. And when I consider all the factors I just laid out, their very diversified portfolio of business segments, their current dominance and bright future in the telecommunications service business, their smart acquisition of Time Warner in 2018, their current stock price and current dividend, and the safety of this dividend moving forward, I like them. I still encourage you to do your own research, because I'm just some guy on the internet who thinks he knows something about stocks. But I absolutely love this company as an investment, and I will be buying another $250 worth of this stock when the market opens Monday morning. If you guys have been eyeing a stock and would love my opinion on it, let me know in the comments below. If you guys liked the video, make sure to like the video, and if you hated it, please dislike the video, but leave something I should improve on in the comments. On the screen now, you can see my most recent upload, and a video that YouTube is suggesting for you, so just check those out. As always, subscribe to the channel, because we have some exciting stock analysis videos coming up, and in a stock market like this, there's never a dull moment. I'll see you guys in the next video.